All right, you guys, I'm back. Last chapter of the book, evolving your coverage as you grow and making sure you're keeping an eye on these things, okay? And this discusses really revisiting your insurance coverage at least yearly. Most of our clients, we at least try to check in with them semi-annually, if not quarterly, to get updates, make sure we have equipment schedules up to date, if they bought or sold any new tools, equipment, etc. Vehicles are one thing that we see, love you guys to death, but you'll go buy a new vehicle and not tell your agent that you bought it, or you'll sell some stuff and they end up staying on the insurance and you end up paying for those things for 3, 4, 5 months before you realize, oh crap, I sold that truck and I've been paying insurance on it for the last couple months. So those check-ins, really important to make sure that you are both up to date on the equipment, things like that are being covered, and also the projections that you've made on your sales and payroll for the year, because those can be adjusted mid-year in certain situations. Now, one thing that is important to discuss, we haven't hit this before, is when you're doing your projections with your agent, especially if you are in that specialty market that I've talked about, the excess and surplus lines market. I'm sure all of you have dealt with the pain in the butt audit up to this point, okay? And we all have huge ambitions of what we hope that we're going to do. When you're in these specialty markets, it is very important for you to be conservative in your projections. And the reason for that is on those specialty policies, they will only audit up, they will not audit down. So if you've said that you're gonna do $3 million this year in sales and your policy was rated on sales and you paid that bill, and at the end of the year you bombed and you only did 1.5, you're not gonna get a refund. But if you say you were gonna do 3 and you did 4, you're gonna get charged for that extra $1 million of sales, and it's gonna be due net 30 or your policy's canceled. So we try to help our clients track that throughout the year. We estimate conservatively, like what do you know that you're going to do for sure? And then let's check in every quarter and make sure that we're on pace for that. And if we're gonna eclipse that, then let's get a mid-year adjustment in place where we can start paying towards that now so you don't get the big audit bill at the end of the year. Very, very important there. Some other things to start looking at is underinsured versus overinsured. Were you doing projects a couple years ago that required you to have a $5 million umbrella that you're not required to have that today? Maybe you only need to have a $1 million or $2 million umbrella and you're